Alright friends, I have just sold one of the ETFs I've been holding since the very beginning of my investment journey, HXS, and replaced it with VFV. Is that because HXS is bad? No, it's brilliant in its own way, but the more I researched for my particular case, for TFSA, for Canadian investors, the more it made sense to switch. Let me walk you through it. Hi, I'm Mike, and on this channel I'm showing you how much an average person investing $100 a week can achieve in the long run. Real numbers, real money, real decisions, and today's episode is about one of those decisions. Let's go! Go, go, go! Let's give a credit where it's due. HXS is kind of clever in its own way. It allows Canadian investors to avoid withholding tax. If a Canadian investor holds shares of an American company, when that company pays dividend, the investor is automatically charged 15% of withholding tax. HXS, instead of paying those dividends, reinvests the dividend into the same stock. So no dividend is paid, no 15% tax is paid.
Nice. Very nice.
But here's the catch.
I knew it! I knew it! I knew it!
It doesn't do it for free. What it does is providing a swap service. So these swapping dividends for shares comes for a price, and it can go up to 0.5% per year. VFV in turn doesn't even hold all those shares. It holds an ETF. It's VOO, which tracks S&P 500 index. So it's more transparent and there is no intermediate party doing the swap.
Let's talk numbers.
The expense ratio of the HXS is 0.1% plus 0.5% in these swap fees. So having those HXS positions in your portfolio costs you 0.6% annually. VFV pays those dividends, and those dividends are subject to 15% of the withholding tax. But the thing is, the dividend yield of VFV is slightly over 1%. So those 15% of the withholding tax come as 0.16%, plus 0.09 of the expense ratio, and in total 0.25% annually. So the fee is over twice as low as HXS. That could have made sense if the performance of HXS was higher, but if we take a look at the last few years, let's say 2024, 35.24% versus 34.98%. Year 2023, 23.23% versus 23.22%. Year 2022, well, you get the idea. So they perform the same, VFV is cheaper, more transparent.
I'm in! Count me in too!
I sold my HXS position and reinvested the whole money into VFV. Overall, the strategy stays the same. 3 ETFs, one for S&P 500 index, another one for growth, the third one for dividends, in approximately equal parts. Now let's quickly review the numbers. This is the spreadsheet where I track all my investments. I won't bother you with all the details, all the purchases. Here is the most interesting part. I sold HXS on April 29th for the price of $79.11. Now I duplicated the line for April 29th, so I was able to buy 9 shares for the price of $136.55. Now the most interesting part, how much did it grow? So I've just expanded the same formula I've been using, made some adjustments for this duplicated line, and the overall growth from the very beginning of my journey to the current date is 13.4%. For the same period, S&P 500 showed these numbers, and it showed this kind of growth starting from the same point. As you can see, the performance of my portfolio still beats S&P 500 index. But the performance is a different thing than the gain, right? I explained that a little bit in my previous video, you can check it out here. And even though the performance was quite significant, the real gain was lower than that, just because I kept investing once a week regardless of the market move. So there was a period of time when I was looking at pretty nasty losses, up to almost 8.5%. But can you see this number here? I'm back to the positive side. Now I'm seeing some gain. It's quite a small one, it's lower than it used to be at the very beginning, but still it is positive. We can take a look at it from the different angle. On this graph, the blue line is the money I invested, the red line is the value of the portfolio,
As you can see, we're back to the positives. And this graph shows the overall gain. Used to be over 6%, then it went down really low. Now it's recovering.
So, is HXS bad? No, it's tax efficient and it might work well for non-register account. It just doesn't work that well for TFSA account comparing to VFV. This is my 8 months update. After such a short time, my portfolio already shines at $4,000 and it's been through a few quite major downturns, but nevertheless it shows some gain. It's a small one, but considering the circumstances, it's a good one. And by the way, its performance consistently beats S&P 500 index. I achieved that by doing nothing but consistently investing $100 a week. Okay, a couple months ago I bumped that up to $130 a week. If you want to see the details, check out this video. If you think you don't have $100 a week for investing, this video will change your mind. Like and subscribe if you like this video. I'll see you in the next one.